There is a letter in a drawer. Maybe yours, maybe someone you know. It came from a bank, so you know it's reliable. It has some numbers written on it. Looks routine, right? Of course. But there are three clauses in that mortgage renewal letter that they are hoping, aka the bank, that you won't notice. These three terms can literally and financially change your entire life without you even realizing it, Henrys. If you want to know what those three clauses are, stick around as we resolve understand today's episode. If you're ready, Henry, let's get right into it and let's see what we have in store for us. Hi, it's Rahim from Fine Print Canada. Calm Finance, no hype. Today's episode 13 of our series, and as we see in our screen, the point of discussion for today's topic is your mortgage is about to cost you more and you already signed it. This means 60% of Canadian renewal mortgages are going to get renewed in 2025 or 2026, and 85% of you are locked in when the rates were below 1%. This indicates that if you had signed a mortgage in 2020 or 2021 during the COVID phase, when the rates were historically and factually very low, you thought you got an offer, now you signed up for it, and now it's about to get renewed. That renewal that's about to come in is going to cost you, if you signed a mortgage for let's say 400K, $7,200 more than per year previously that you had signed up for. That is just the base calculation. Imagine losing thousands of dollars just because of one interest rate renewal. And the worst part, most of the Henrys, they won't even read the renewal letter. Think about it for a second. You won't even read it, and the lender, aka the financial institution, is counting on it that you won't read it. Let's see what they have in store for us. These are the effects. The clause you didn't read. Remember, we talked about the three clauses we're going to talk about that the bank or any financial institution doesn't want to know. These are the three clauses I'm talking about. Let's see what they are. First, the rollover default. This means the letter that came to you and you didn't respond. You thought, oh, this is just admin work, right? It just auto renews. This is what they want exactly for you to do because the rate they wrote in there benefits them, not you. Again, the rate on that letter that they gave you benefits them, not you. Second, the prepayment trap. Let me know if this sounds familiar. You signed a mortgage, you had something called the prepayment penalty. This indicates you can pay higher than amount in every year to reduce the amortization period or the time it takes to pay off your mortgages. You can officially pay it, you can legally pay it, and we won't charge you any penalty. Does that sound familiar, Henrys? Now, here's the twist. With the new term you're going to sign, those are all going to be reset. They're going to make it more restrictive, more painful for you to get rid of that or to pay off your mortgage faster. Now you might be thinking, why would they do this? They are my bank. They know me so well. I have been a great customer to them. What you don't understand is, Henry, banks don't care about who you are or what you are. And the reason to extend or remove the flexibility to pay off mortgages is because they want to take out as much interest as they can from you before they have to let go of that. So if they can take it out, let's assume you can pay a penalty of per year $5,000, right? Sound familiar or sounds normal? They will lower it down to 2K. Now that difference that you know, is going to increase your amortization period or reduce your ability to pay off your mortgage faster because you won't be able to do it because it's a clause that you didn't read. Think about it for a second. Third, the rate negotiation window. So you have 120 days to negotiate before renewal comes in. But here's the kicker: most of you wait for the letter to come in, and that is exactly nothing they want counting on because the moment the letter arrives, it's already past that window or is very close to the window. So you're stuck with whatever rate they give you, or there's no option of moving around. Now you might think, oh my god, this sounds very familiar, right, Henry? That is exactly what is it. The three clause they don't want you to know that we told you we're going to talk about it. One more toss I'm going to talk about. That is stress test. This indicates that you might assume if you go to another lender before the 128 days, you need to do all the stress test, aka show your financial, show every all documents, do all the paperwork, right? That assumption is wrong because at renewal, not midterm, not before, just at renewal, the stress test is waived. So you can go out, find better rates, switch to a different lender, and all that is already taken care of. Shocking, isn't it? The clause you never thought, but you always signed. Let's see what the action plan is to try to overcome or strategize around it. Before you do that, here is a classic comparison of a normal Canadian versus a Henry that watches our show. Most Canadian will do the passive renewal. Sign out a renewal without comparing rates. Just sign it. Whatever it is, yeah, I think I'm good. Miss the 120 negotiation window because, oh, what cares, right? Who matters? Nobody cares, right? It's just the same. Stick with their current lender out of habit or because they think they have a relationship with the person that sold them the mortgages. If you are that person that thinks that your relationship with the person sent you or sold you the mortgage, you're a rude awakening because they are not. Ignore variable as fixed rate because you think they both are the same. You're thinking the rates are always going to go down, so why not go for the variable rate? In the current climate, I can assure you with high certainty, it is very rarely is going to go down. But now, the Henry, if you're watching it, specifically this show, they will do the exact opposite. They will go for the strategic renewal. First thing they will do is shop competing lender because no stress is required. No stress test is actually required to do this. At renewal, you will start the 120-day cycle early. This means you don't wait for the particular letter to arrive. You know it's going to be there. You already know the dates. You start it 120 days before that. You run the fixed versus variable math with Bank of Canada rate cut projections. This means you will run the analysis, you will see what the best is for you, and understand what will work for you in the next 2 to 5 years, whatever type of mortgage you're trying to get in. And with current AI, let's be honest, it has become very simple to do this. At least you get a starting idea, starting point where you can build from compared to earlier years. Use renewal to accelerate prepayment at the new renewal term limit. This indicates that you understand what the particular prepayment limits are. Is it lower? Is it higher? Does it make sense for me? I'm able to pay this to avoid prepayment penalties. I'm able to accelerate my amortization period. And another clause that I think most of the Henry don't know is called a portability clause. This means if you move to a different country, oh sorry, move to a different province, you can move your mortgage with you. That means the same rates or same terms you got in that mortgage, you can actually transfer it. And that is a very important clause that most of you don't know. And when you know it, you realize it's nothing or it's not what you expect. And that cost you $100,000. And if you don't believe me, I challenge you. Go read your current document and you will see this thing specifically written in there. Again, with AI, upload the document, they will read it for you in pure, non bank, non financial institution terms to tell you exactly what I'm talking about. Now, how do you go about it? The action plan. Let's see what we have in store. This, I will say, the checklist for most of the active Henrys that wants to be strategic about it. So before you sign anything, do these. Number one, start 120 days before renewal. That means don't wait for the letter, don't wait for the bank to call you, don't wait for any of that. You know when it's going to get renewed, you start your process, you start your research, you start your own strategic process. Because as you know, the longer you wait, the less leverage you have, the less power you have, and the more you are in control of the financial institution that you currently are. Second, get three competing lender quotes. As we discussed, no stress at a renewal, so you can easily go out, shop the rates, because I want you, Henrys, to come to your organization with a proper offer, with a power and strategic move that they can see that you have it, that you're not bluffing, not taking it out of vibes or your thoughts. You actually tell them, hey, listen, this is the offers I have. Can you match it? And if you don't, I'm walking away. Thank you and goodbye. Imagine the power of saying that, right? Third, run fixed versus variable math. This means you understand the difference between these two terms, run your projections, and see what is best for you, not for the bank, not for your friend, not for anybody, but only you. Fourth, review prepayment and portability clause. So you decide these clauses, what they mean, how it can affect you, and how you can use it strategically. Because you might think, oh, I won't need this in the next 5 years, right? What's going to happen in the next 5 years? We all thought 2020 was not going to happen. It happened. We didn't thought Russia and Ukraine was going to happen. It happened. World War III is about there, US and Iran, right? So now think about it. All of these happened within 5 years of your window when you specifically got your mortgage. So you think that's going to now slow down? I assume with AI, with different variations that are coming in, different all the geopolitics tension, it's just going to accelerate way more faster than it's ever been. So that 5 years that you think is a big window is actually not. And I am predicting next 5 years going to look completely different, and none of us except the elite know what is coming for us. And they are prepared, and we are not. That's the harsh reality. Fifth, coordinate with a tax plan. This indicates that you don't just sign the letter because you think you can absorb the payment. For example, let's assume your prepayment plan or your mortgage payment currently is around $2,000, correct? Now that 2K you think you can absorb, in renewal it went to 3K. Still higher, but you think you can absorb it, right? What you're not getting is you want to see above it, because if an extra 1K is going over there, that 1K can't go to your TFSA, that 1K can't go to your RRSP. And over the years, imagine the big amount that you're giving up. And most importantly, you're pushing your own financial freedom far into the future with the unknown that we discussed. Just because you think you can absorb the cash flow now, but you don't know about the future. You might not be able to. So then what are you going to do? Run, panic, declare bankruptcy? All these things seem to us like it's far fetched, but it's real and it's happening every single day without us knowing or being aware of it. So remember, coordinate this with your accountant. If you don't have an accountant, get a fee only accountant or a CFP, which is only fee only. That means they don't try to sell you anything. They charge you a particular fee and they give you their unbiased opinion, because that is an important thing you need. Because this mortgage you're going to sign is going to be one of the most important financial decisions in your life. It can drastically change whether you become financially free in the next 5 years or get trapped into the system we call matrix. Hello, welcome back. So I wanted to walk you through a tool that I made called Canadian Offer Intelligence Suite. As you can see from the line or from the sentence, it's designed to analyze everything we have here to understand the situation of our financial life. This has a specific calculator that we talked about in today's episode called the Mortgage and Affordability Calculator. Let's see how it works. So let's say your purchase price, we're going to renew it again, will be around $400,000, right? The down payment is going to be, you're going to pay around 10 to 15%. This is your amount. Amortization period left will be maybe 20 years, right? Monthly, right? Ontario, everything looks good, right? Your income, let's say you have around $150,000, correct? You see, your qualifying will be this amount. But now look at this particular option 5.5. Look at it how it changed. 7. Just look at this example again. 6, 2,643. 7, 2,855. Imagine that amount of change in just 1% rate. That is exactly what I'm talking about in the episode. That rate is going to affect you so much without even realizing it, right? It is going to be one of the most important thing that you ever see. So if you want to use this tool, all you need to do is comment mortgage calculator tool and I will send you this link free of charge, completely for you to use. Or you want to use your own links or own calculator you want to use, you can use it. But the whole purpose is to make you aware about the how interest rate changes in real time to make you understand the amount of cash flow you will lose without checking it properly. This is just a classic theory, right? Proper disclaimer, not an advisor, not a planner, just a regular person that's telling you how system works because I actually work in the final system, so I know parts of it and making all of you Henry aware of what they won't tell you. So I hope you use this tool. If you want to, comment on the YouTube video. I'll send you a link or use your own calculator. But run your numbers through this in real time so you can understand what you're signing up for before it's too late, Henry. So I wanted to come back here for a closing. Here's what happens exactly if you don't read or auto renew without understanding it. Month one, you see the cost, you absorb it. No problem, right? Yeah, nothing matters. Month three, you realize you can't overpay it without causing a penalty. Now you're thinking, should have listened to that guy or my instinct, right? It's not too bad yet. Month 18, you realize you are stuck in a situation where the rates have gone way far up and it's not expected to go down. And now the next that it is coming is going to be more worst and you can't do anything about it. Month 60, when your term ends, you will forget everything about what you actually experiences, what you actually listen to this, and you will start the process all over again, signing the letter. Does that sound familiar? If it does, you are not the only one. You won't be the only one, but you can be the one, Henry, to change that for yourself first before you go around to change everybody else. Because remember, the letter is coming. It's already there or it's about to arrive. The fine print is always there. Now it's on you after watching this video to read it, understand it, and make the best of it. Because now, if you choose ignorance or choose to rely or trust your lender, that's on you now. So you deserve everything that's coming to you, either good or bad. Might be harsh, might not be something you're looking for to hear. But hey, at this channel, we keep it real, we keep it completely non emotional. Again, it's Rahim from Fine Print Canada. Calm finance, no hype. If you like the channel, specifically the video, make sure you like and subscribe so we can grow, we can learn. Share this video to someone that you want to educate them or give them just an idea about what is going to happen to them for their mortgage so we can all help each other out. Thank you for watching the show. See you next week. Same time, same place. Signing out now. Thank you.